Wow. Wow. Has inventory really shot up? I was looking at, we are almost 100% up on inventory from about where we were at almost a year ago. Hey everyone, this is Rayce Robinson, your favorite Florida mortgage broker. And it seems like just 2 seconds ago I was talking about limited inventory and how crazy that was. Obviously that's how we got all this price appreciation. Now we have the exact opposite situation where we have a lot more homes on the market, days on market going up, months of supply going up. And it has me wondering, has anything really changed structurally? Obviously, when you have something that's really, really low, right? If you have one apple that you're selling and 10 people that want to buy them, it's going to drive the price of that apple up. But if you have 10 apples and only one person wants to buy it, obviously that drives that price down. So I'm going to run through the numbers and give you my thoughts, because the internet, I see so many videos on what a buddy of mine calls the Crash Brothers, talking about the incoming price correction. And the truth is, I'm, as an investor and in the business, looking at data, care less about emotion and fear tactics, and want to see what's likely to happen as a homeowner, investor. And if you're watching this video, you're definitely probably a homeowner, could be a home buyer, and knowing this information is very, very important. Again, this is Rayce Robinson, your favorite Florida mortgage broker, and let's jump into the numbers. I'm gonna run through these fairly quick because I want to jump into my thoughts on where we're at. So this is what I was talking about. We're at 10,796 homes on the market. Last year at this time, we had 5,450 homes on the market. So that is a 98.1% increase. Huge. That is big. We are continuing to increase from last month to this month. That's a 5% increase. So we have just under 11,000 homes on the market. We'll look at the breakdown on that as far as what those are. But median price, we're going to look at the health of the market here. Median price continuing to go up, going up from that last month to this month. So really no fall in prices. And this is true. There are markets like California, New York, but in general, most markets not have been really any price softening, which is surprising when you think that we got rates close to 8%. So prices staying about the same, but inventory really starting to creep up. Now, when we look at the health of the market here, I like to look at foreclosures. 25 distressed home sales here in Central Florida. It's a 47% increase. Last month there were 17. That means there are almost no foreclosures. I mean, when you have one of something and it goes to two, obviously that's a huge increase. So we were so low on foreclosures. Now that we're getting some people falling behind on the mortgage, that the increase is a lot compared to where we've been. Very, very low, especially in Central Florida historically. So there's really no issues there. And it's really simple because a lot of people that own homes have a ton of equity. They got really low rates. And so there's really not a lot of issues with people. You know, if they get in financial bind, they're really just going to sell their house. And the new stats say there's almost 40% of the people nationally that have their house paid off, which is, I think, getting close to be highest on record. And so that is crazy if you think about it. You look on the street and 40% of those people that are primary residence owners have no mortgage. So that's really, really crazy in my opinion. So let's look at the numbers. Let's look how they break down here. So when we look here, so rates are 6.69%. This 10,796 homes breaks into 7,564 single family homes. 2,000 of those are condos, or 2,088. 1,144 townhomes. New listings fell from last month to this month. New contracts about the same. I like to look at sales closed, falling a little bit. So 2,900, 2,600, but we've been bouncing around in this 2,500 to 2,600 sales, so that's right on track. Days on market, really not moving. Now, what's the health of the market? So I like to do comparisons to where are we at historically, where were we at the last time housing prices, or not housing prices, but housing inventory was where we're at now, and try to figure out what are the predictions in the market and do they make sense to me? Because I can have a stockbroker saying, don't worry about it, the stocks are going to go up. I still want to understand the numbers on my own. So I decided to take a look here at the 20-year history of the Central Florida real estate market. So here we are right now in June of 2024. Got 10,796 homes on the market. right? About 2,600 sales a month. We have about 4.15 months of inventory. So when were we at 10,796 homes on the market? Because it's been a while. So I scrolled through, not 2020, not 2019, not 18, not 17, all the way back in February of 2016, we had 10,696 homes on the market. We had very similar inventory, 4.43 months of inventory, but we had rates at 3.75%. What I thought was really interesting about this is we have to go all the way back to 2016 to see when we had this many homes on the market. Now, also, I do just like to show this. I don't think it's relevant, but I do see people doing crazy videos online. If we go back to 2008, which is the Great Recession, we had 25,274 homes on the market. So that means we had a ton of homes on the market. So obviously we're not at 25 or 26,000 homes on the market, but it's been since 2016 since we're at now. And somewhere between 11,000 homes and 26,000 homes would be a major price correction. So could we get a major price correction, and what would cause that? I pulled up this U.S. home price forecast for 2025, and from Goldman Sachs, Wells Fargo, Mortgage Bankers Association, Zelman, Fannie Mae, Freddie Mac, Moody's, they're all picking anywhere from pretty much 1 to 4% appreciation. Now that's not some kind of conspiracy. That's just that they're looking at some key numbers that make a difference. And what are those key numbers? First are rates. Right now, rates we're at about 6.8% at the time of this recording. But more importantly, when we look at this trend, we were all the way at 8%, and we kind of been jumping up around 7.5 to 7%, and we finally broke this trend under 7%, where it looks like the Fed, especially in some of the recent comments, are saying that rates are headed on their way down. Remember, they control the Fed funds rate, not interest rates, but that influences rates, and they are saying rates are on their way down. And when you look at the history here, look how fast they raise rates. In my lifetime, it never was like this. So shot them all the way up, like I said, close to 8%. And now we are going to be on this downward trend, which is great news. So in 2016, we had 3.3% rates. I can tell you right now, if we had 3.3% rates, the amount of people that we jumping in the market would be ridiculous. In fact, I don't even want 3.3% rates, because that's where you get this runaway appreciation. And to kind of drive this point home, if we look at the mortgage purchase application index, this tracks the amount of purchase applications going on all the way back from 2000. We are at some of the lowest purchase applications that we had seen really since 2014 and 15. What happened when rates shot down in 16, 17, 18? Applications went up. Why is that important? Why are all of these companies predicting appreciation when we went 100% inventory for a year? Because if inventory keeps going up, prices are going to come down. They see what I just said, which is mortgage applications are at an all-time low, or one of the all-time lows. We're at 7+% rates and going down, not the 3.3% that was in 2016. And as rates go up, those mortgage applications are going to go up. Yet people that have 2 and 3% rates and have their houses paid off, they're not likely, or at least in a way less percentage likely, to get involved back in the market. So you have this constraint on inventory because you've got all these people that own their houses free and clear, have really low rates. You have interest rates likely on their way down, and that's going to shoot mortgage applications up, which is going to create appreciation. The good news is the amount of appreciation they're predicting is not, to me, scary, meaning 7, 8, 9, 10% appreciation is really too much. 2 to 3% a year is what you want in a normal market. So again, is this a prelude to a crash? That's one way to look at it. In my opinion, no. Or is this an opportunity? Because as rates fall and mortgage applications go up, even if prices don't go through the roof, that's going to increase competition. I guarantee you're going to see increased competition as rates fall. Do I have a crystal ball? Do I know for sure what's going to happen? No. If there was some kind of black swan event and that created a lot more inventory, would prices go down? Yes, absolutely. So ultimately, I believe if you're a first-time home buyer, you got a really good opportunity now. I think you're going to look back and say, man, I could have bought now and refinanced later. I know people have been saying that. I still think that's the opportunity. And if you're a home seller, no rush to sell. You're still getting modest appreciation. Still don't need to rush out and sell to try to get in front of the market. But if you need to sell and you have listed at a fair price, you're actually going to sell it really the days on market being 54 or so days on market. Anyways, that's what the data says now. We'll keep looking. Thanks for watching the video. Like, subscribe. It really helps the channel. This is Rayce Robinson, your favorite Florida mortgage broker. As more information becomes available that moves the market, I'll cover right here. Have a great day, great month, and I'll check in next month when we get the new numbers. And I'll really be interested because we'll be getting past summer to see if there's any kind of slowdown and what happens there. Again, have a great day. Talk to you soon.